Hi and welcome back to Cheeky Crypto. My name is Nick and today guys we're going to be jumping back down into the world of Bitcoin, taking a look at what's been going on most recently and what we kind of expect to happen next. As I get into the video, if you find it useful and informative, hit that like button. I do appreciate that. If you happen to be new to the channel, then why not go ahead and subscribe. Tap the bell, select all the notifications, and in doing so you will be kept up to date with absolutely everything that we do here at Cheeky Crypto. And if you haven't yet joined us in Discord, guys, check it out, linked in the description down below. It's a fantastic community talking crypto 24/7. It's completely free and I don't think you'll be disappointed by what you find down there, so why not go ahead and check it out. Okay, let's jump right down into this one. A few things to kind of talk about today. So this is Bitcoin paired up with USDT on the hourly chart, and Binance is the data source. Now, as you can kind of see, we came down into our targeted range yesterday. This was us talking about 22,600 to 22,969. We wicked down into our yellow box target range with the low of $22,841.19. Now, the obvious thing here is that we have a structure that could be deemed impulsive if we drop down to a certain level. Okay, that would basically mean that we have this ability to look at this C wave as a C wave structure at the moment, but it may in fact become something slightly more sinister. It may become a wave 3 structure instead. Okay, so what we want to do here is basically ascertain what is that target. Okay, what number does Bitcoin have to hit under a specific structure in order to confirm that we are in fact going down in this trend structure rather than just a corrective short-term move to the downside. And if we are to go down in a trend-based structure, then it would pull into question whether we will have this high of 2728k. Okay, so let's go ahead and take a look at this. So essentially right in here we have a move to the downside, and the first thing that we need to do here is we need to kind of just park for now this area. Okay, we'll just forget this part is happening because we'll talk about that after we've discussed what's going on right over here. Okay, so if we were to take a look at this, we can see that we had this kind of structured move to the downside here, but it is a diagonal structure right in here. Okay, it's a diagonal structure. You'd probably have to take this down into a 15-minute chart to be able to really see exactly what is kind of going on in there, but you can kind of see maybe it has to be a little bit lower, but 1, 2, kind of 3, 4, and then kind of 5 like this, right? This kind of overlapping kind of diagonal structure to the downside. Bring it back to the hourly. Okay, so that's kind of what's going on right in there. And if we were to reflect on this as a 5-wave structure, which I think is the kind of the thing that we should be doing because it's clearly what it is, it would look like this. It would look like a wave 1, wave 2. There's a 1, 2, 3, 4, and 5 right in here. Then we've come up. Actually, that's going to be about there. Then we've come up to this wave 4, and we're yet to have that 5th wave down lower. Okay, now considering where we are and the fact that we're overbought, our expectation should be probably that we have to come down here towards our slightly lower target, which would be, let me grab this and pull it on. I'm just going to zoom this in a little bit more, guys, so we can see the numbers exactly. And then I'm going to put a yellow box targeted range right on here. Okay, it's going to be right here. 22,656 to 22,709. Okay, that there would essentially be our 5th wave target. Now, let's go back to the beginning here. That part that I said, let's park for now, this bit, this is important because if we take a Fibonacci retracement from here to here, okay, so from the bottom of this move to the top of this move this over to where our wave 1 started, which will be over here. Although, to be fair, actually, it should probably have started up on this high. So I'm going to go and put this on here, and I'm going to move that over to there. Be an interesting kind of structure that was be like so. That's a wave 2 and this is a wave 4. Okay, so that doesn't change any of the analysis. That's just where it's begun. And yeah, so if we put this here, we can see that in order for us to consider this a wave 3 structure, we would have to hit this 1.618 area right here, and that falls in line with our 5th wave target down here, 22,667. If we hit this number here, okay, and we hit 22,667.36 cent or lower, then what's going on is actually a wave 1 wave 2, all of that is a wave 3, will then come up into a wave 4 and then have another fifth wave move to the downside, which then pulls into question, okay, if this fifth wave comes down nice and low, is this actually a wave 1 as well? Okay, and if we take this and we pull this to the upside here, and we move this over to here, we could take a look for that 1.618, which would be down here at 22,019.53. Okay, and if that gets hit, and then all of this, and this fifth wave here, by the way, goes down into that level there, which will be interesting to see if that does happen. It's a bit of a stretch. But if that were to happen, then you consider this a wave 1, this a wave 2, and all of that as a wave 3 before going up into a 4 and a 5. Okay, then of course you'd have to pull into question everything else that's been happening in this sideways trade, including this move of a wave 1. This is a wave 2, which is a double top situation. And then all of that will be in our wave 3, up for a wave 4, and then down into a wave 5. And you can start to see the degrees of these structures nesting inside each other. And you can kind of see how the market would naturally kind of gravitate its way to the downside. It would be, slow burn, but you'd slowly kind of work your way into these kind of lower ranges. Now, essentially, the true confirmation of preventing us from going up into that $27,000, $28,000 range could only happen if we cross down lower than this threshold at 21,351. And if all of this plays out, and it's a big if, it's not a guarantee by any stretch of the imagination, but if all of these things play out here, and you may have to go back and just watch out for those key targets and kind of write down those numbers if you wanted to, then this is how the market would structure itself down there. That's how you'd kind of prevent yourself from going up into those 27, 28K areas. And what you'd find is the structures that would emerge would basically wipe out our stochastic RSI and continue us moving down slowly and gradually over time. And of course, if you do all of these things, you would then have another relief rally, right? So if we were to complete all of those 5-wave structures and we were to finish it off down here, then essentially all of that could potentially just be a wave 1 with some kind of relief rally for wave 2, only to come crashing back down significantly at a later date. And we can kind of then start to map out what these things might look like over time, right? And we might be able to finally pull together a bit of a map, a bit of a roadmap for how Bitcoin could come back down and test those areas that we have as fair value gaps, as imbalances. So if I come up here onto our smart money concepts, you can see these imbalances kind of where they kind of sit, right? This is just on the hourly, but if I bring this up to our daily chart, you can kind of see there's imbalances down at 19K, and that 5-wave structure mapping could basically be how we end up moving down towards those fair value gaps and how we could potentially fill them. So we want to be aware that, markets, they don't just move up forever. There are natural, healthy corrections. And I do think that moving down towards 19,000 is a very healthy correction. There's nothing wrong with that. Moving down even towards this green area down here of $16,000 is reasonably healthy, because this is where the buyers are. A lot of buying is happening down here in these lower areas, and where the discounted area is as well. Right now, what we're really doing is hovering around and paying premium prices up in this premium zone. So really, prices do have to kind of come down. Profits have to be taken after such a significant run to the upside. And, we have these fair value gaps, which I think are the ones that we're really looking to fill around 19. But it wouldn't be too surprised if we come down and test those lows. And I'm not too surprised either if we end up moving down lower, heading more towards new lower lows, because of the fundamental stuff that's going on in the real world. Everything with the economy and the state that it is in around the world, not just the US. And of course, following the money, and the big money is not coming in, only retail money is coming in. So overall, do expect a very volatile Bitcoin market, expected to kind of drag out for a while. I'm not expecting this to kind of be over quickly or anything like that. But essentially here, it looks like we are going to have to kind of deal with a potential volatile market on Bitcoin for a little while, which of course does it's fantastic for traders who are actively trading the market. Very frustrating for retail investors who are just hodling, seeing prices move up and then move down and slowly kind of bleed out some of the profits that they've seen, because I think that's essentially what's going to happen there. But looking at these key areas, these are areas that we should be pretty comfortable with, and they're pretty natural to kind of think about. So 19K is not anything too scary. Coming down probably lower than 18 is going to be where things really start to get scary for people, because we do lose a lot of support areas in there. And then, of course, consolidation should happen down here. And if you lose any of that, I mean, well, yeah, from there, it's really just kind of be downhill. Now, from this daily chart, we can kind of see, what's going on. But if I bring this up into this one, bring this down, we'll just scale this across. Actually, I'll tell you what I'll do is I'll bring it into this weekly here. The weekly here, we do have the death cross a couple of weeks ago. We can kind of see that. We can also see that we've been hit back down quite heavily from this $25,000 range. This is the same range that took us back down in August of 2022. It's the same range that's hitting us back down now, except we have to have the death cross on the simple, well, it's not even a simple moving average, it's just a moving average. And then, of course, we can change this up. We can throw the volumes in. We can see the volumes are not overly impressive. I mean, they're okay. They're not brilliant, though. We've kind of been through that before. The RSI is quite high. We haven't got any divergences on our daily chart. Let me just check to see if there's anything on the weekly. Nothing on the weekly there. So ultimately, we're not exactly confident looking at it. It doesn't look like we have, a fantastic kind of I guess chart that says that we have to go up right now. I think if anything, it's a clear indication that we have to kind of move down, and this is actually on the monthly. So yeah, for the most part, it looks like we kind of have to go down. Let me just check the daily here from the divergence indicator. So there was bearish divergence, and yeah, so we're starting to come down from the bearish divergence essentially. So yeah, for the most part, just expect some volatility on Bitcoin, and we'll see how it kind of goes from there. And yeah, I'll leave it right there. If you found it useful and informative, hit the like button. I do appreciate that. If you're new to the channel, subscribe. If you haven't yet joined us in Discord, then why not check it out? Until the next one though, guys, have a fantastic day.